Hey everyone, welcome back to the channel. Whether you're a seasoned trader or just starting out, today's video is going to be a game changer. We're diving into 3 powerful indicators that could completely transform your trading strategy. These tools are used by pros to spot trends, predict reversals, and maximize profits. So, grab a notebook and let's get into it. First up, we have the moving average. This is one of the most basic yet powerful indicators out there. Moving averages help you smooth out price action and identify the overall trend. There are 2 main types: the simple moving average, SMA, and the exponential moving average, EMA. The SMA gives you the average price over a specific period, while the EMA puts more weight on recent prices, making it more responsive to current market conditions. Here's how you can use it. If the price is above the moving average, it's generally an uptrend. If it's below, it's a downtrend. You can also use crossovers, like when a short-term moving average crosses above a long-term one, to signal potential buy opportunities. Pro tip: combine a 50-day and 200-day moving average to spot the golden cross or death cross. These are strong trend reversal signals. Next, let's talk about the Relative Strength Index, or RSI. This is a momentum oscillator that measures the speed and change of price movements. It ranges from 0 to 100 and helps you identify overbought or oversold conditions. Here's how it works. An RSI above 70 typically indicates that an asset is overbought and might be due for a pullback. An RSI below 30 suggests it's oversold and could be poised for a bounce. But here's the key: don't just rely on these levels alone. Use RSI in conjunction with other indicators or trend analysis to confirm your trades. For example, if the RSI shows an oversold condition during an uptrend, it could be a great opportunity to buy the dip. Last but definitely not least, we have Bollinger Bands. This indicator consists of a middle band, usually a 20-day moving average, and 2 outer bands that represent standard deviations from the average. Bollinger Bands help you measure volatility and identify potential breakout or reversal points. Here's how to use them. When the bands tighten, it's called a squeeze, which often signals that a big move is coming. If the price touches the upper band, it might be overbought, and if it touches the lower band, it could be oversold. You can also look for M-shaped or W-shaped patterns within the bands to predict reversals. Bollinger Bands are incredibly versatile and can be used in trending or ranging markets. Just remember, always confirm with other indicators or price action before making a trade. And there you have it. 3 indicators that could seriously level up your trading game: moving averages, RSI, and Bollinger Bands. Remember, no indicator is perfect on its own, so always use them in combination with other tools and your own analysis. If you found this video helpful, don't forget to hit that like button, subscribe for more trading tips, and ring the bell so you never miss an update. Let me know in the comments which indicator you're most excited to try out. I'd love to hear from you. Thanks for watching, and until next time, happy trading.